Visa stock is up over 11% year to date in 2025. It's also up over 81% over a 5-year period. And of course, I'm happy about that. I've had Visa stock rated as a buy this year, last year, and for over 5 years, I've been recommending Visa stock, and I've owned Visa stock myself for several years. Now, the company recently reported quarterly financial results, and investors are asking me to review those figures and update my recommendation and let everyone know if I still think this company is a buy at the new higher valuations, especially amid rising risks from stablecoins and other innovators aiming to disrupt this payment processing space. I'll answer those questions in this video and review the company's latest results. I'll share with you my proprietary discounted cash flow valuation model for Visa so you can see what I calculate to be a fair value for this stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, I'm going to start with by far my favorite part about Visa stock, and that's this figure here. The company's total cards outstanding increased again year over year, up to 3.4 billion debit cards outstanding and 1.4 million, or billion, I should say, credit cards outstanding. In total, the company has 4.8 billion cards outstanding. And the reason why I think that's the best thing about Visa stock is because it creates a huge competitive advantage. It creates a positive virtuous cycle in that if merchants want the business of all of these folks that have the cards, they have to accept Visa as a payment method. Otherwise, they miss out on all of these people that have a Visa card in their wallet. Also, if more merchants accept Visa cards as a payment method, then more folks will want to have Visa cards in their wallets, and that positive virtuous cycle keeps feeding on itself. 4.8 billion total cards outstanding, and it's increasing. It increased by 300 million year over year. That's great. In the most recent quarter, revenue increased by 14% up to $10.2 billion. Operating income and earnings per share did not increase by all that much. In fact, earnings per share only increased by 12% to $2.69 per share. And the reason I say only increased by 12% is because usually when Visa's revenue grows by 14%, its earnings per share will grow by a much larger percentage than what its revenue increased by, because the company has a lot of doesn't have a lot of expense associated with the incremental revenue. As people spend more money, the company generates a percentage of those transactions as revenue, and the profits usually increase by much faster than what revenue increases. But this quarter had some one-off items, including $600 million set aside for potential litigation expenses that impacted the company's earnings per share in the current quarter. Although I don't expect that, and the management doesn't expect that to persist longer term. In a positive sign, not just for Visa, but for the overall economy, its payments volume growth accelerated quarter over quarter. You could see here they reported their nominal Q2 fiscal 2025 results side by side with the Q3 2025 results. And credit card transactions, debit card transactions increased sequentially 7% year over year compared to 4% growth for credit, and then 10% increase compared to 7% increase in debit. Now, the second quarter of 2025 was much worse for global economic growth compared to the third quarter of 2025. We just got the GDP numbers for the US economy, which increased by 3% in the most recently completed quarter, compared to contracting by close to 1% in the previously completed quarter. And Visa's fiscal year and the calendar year don't match. They have a different, as you can see, they recently completed their third quarter of fiscal year 2025, whereas we just completed the second quarter of fiscal year 2025. So there's a mismatch there. But it's good to see that the economy rebounded. Remember when President Donald Trump first announced those tariffs, there was a big concern from investors about the impact to the economy as a result of those tariffs. And as time has progressed, investors have become more comfortable. The tariff rates have been lowered. There have been several deals that have been signed, providing more certainty, and investors and consumers have felt more comfortable with tariffs around 15 to 25%, and not the worst case scenario where some were expecting tariffs could be above 100% after the tit for tat battles that the United States was having with its trading partners. Those counter tariffs, those countermeasures have mostly been reduced or removed, and the tariff rates have settled around 15 to 25%, and that's been a relief to many consumers and investors. Looking ahead, Visa for the full year is forecasting low double-digit revenue growth and low teens uh, increase in earnings per share. So, if Visa generates double-digit revenue growth for anywhere near the near term, medium term, longer term, that will deliver great returns for investors. Remember, Visa boasts operating profit margins north of 60%. So if it's growing its revenue at anywhere near double digits, that's going to generate great returns for investors in the long run. I'm happy to see these results from Visa. Now, when I go to fiscal.ai, which is my preferred data source, Visa's forward price to earnings ratio is now at 29.5, which I feel is a fair value for this stock. And then when I look at my proprietary discounted cash flow valuation model, which I just updated today following the company's quarterly earnings results, I've calculated the fair value of this stock at $408 a share. The current market price is $351 per share. And so Visa stock looks undervalued according to my proprietary valuation metric. Comprehensively, when I look at valuation, Visa stock looks slightly undervalued. And I rate Visa as one of the Hall of Fame businesses in this world. So anytime I can get a Hall of Fame business at a fair value or below, I feel like it's a great deal for long-term investors, which I feel with Visa being slightly undervalued, it's a great deal for long-term investors. Now, the risks are to its processing business from stablecoins and other uh, blockchain or innovative disruptive technologies coming for its category. Although those risks are relatively small, the chances of these things happening is relatively small. The magnitude of the impact could be huge. So it's a small probability of happening, but when it does happen, or if it does happen, the impact can be large. That's the way I view this for Visa. I also look at this as if you hold Visa in a portfolio of other stocks, your other stocks will benefit if Visa gets out innovated. If some disruptor comes in and takes Visa's market share, and the only way they're going to do that is by promising lower transaction uh, cost. And so instead of Visa earning its 3%, whoever or whatever entity comes in and disrupts, they're probably going to come in with the promise of lower transaction percentage, maybe 1%, maybe lower than that. And so all of the companies in your portfolio will benefit as a result of having a lower transaction expense rate. So while if you hold Visa port in your portfolio and it would get negatively impacted from that innovation, the rest of the stocks in your portfolio will benefit. And so the impact overall for your portfolio will not be as large as if you only own Visa. So I think that risk it should be minimal if you're holding Visa in a portfolio of stocks. You can kind of neglect that risk because your other stocks in your portfolio will benefit if Visa gets disrupted. And so to update my recommendation for Visa, yes, I do think this stock is still a buy following their quarterly financial results, and I updated that recommendation today.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now
that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.